Welcome back to It's Only Money with financial advisor Scott Brown with Edgewater Family Wealth. EdgewaterFamilyWealth.com is the website. And Tammy is here as well. Good morning, gentlemen.
Good morning.
Good morning.
And we,
you mentioned the, sorry to interrupt there before you get rolling, but before I forget and somebody yells at me, named Sydney, we have a content library, I'm told.
What?
And yeah, it's true. You know, all these rantings and ravings we do every week, somebody's recording that. I don't know if you're aware of that.
It's supposed to be me on a lot of it.
Yeah. Well, you're mostly the rantings.
Yes.
I'm the ravings,
You're the raver, I'm the ranter.
Exactly. So if you go to our website, which is what again?
EdgewaterFamilyWealth.com.
That one, all of the content is there. And not only is the radio recordings there, but you will find Tammy with his... Tammy, is it weekly or monthly market commentary?
It's monthly.
Monthly market commentary. So anything and everything you need to know about markets coming from Tammy each and every single month on our content. And then you can go back to last year. You can go back to the year before, podcasts, all kinds of content. We have our planning content from Derek Foster. My assistant Linda does some content stuff on administrative issues. So just about anything you want to know, Ryan, about the ins and outs of the investment business is available on our website.
And I'm sure this is thousands of dollars, right?
Yes, it's thousands of dollars. Just send your check to Scott. No, I'm just kidding. Of course, it's free.
Free?
It's free to anybody who has a computer and can use the intranets to get to where they're going.
Well, how about that? That's resources for free at EdgewaterFamilyWealth.com. Very cool.
Yeah. So, okay, now we can get back to the issues at hand, which are, I think we want to talk about some numbers this morning. Is that correct,
sweet.
Jamie?
I've been working on this hard, Scott. All right, I want to run something by you, okay? Because we talked about a theme song, so I'll work in progress, and you can be full on honest with me, and it's not me just making the words up as I go. But how about this for a song? It's the numbers with Tammy. He's got the numbers you need. It's the numbers with Tammy. S&P 500, whatever it may be. Woo! All right, so it's work in progress. I know I killed it, crushed it. You loved it.
Yeah, I'm trying to think of how I can articulate myself properly here, but that's the worst thing I've ever heard. I think that, but with that said, I think that we're going to go with it. I think the worst thing I've ever heard in my life, I think that's what we need for this section.
I think it's
the
catchy.
lyrics are good.
Go ahead, Davey.
The lyrics are good, though. I have to give credit where credit is due.
That's right. Yeah. It wasn't me just making them up and finding a random background song like 2 minutes before you got here at all.
No, I'm sure that's not what happened at all. Yeah. No, I think we're going to go with that. I asked you to put some time into it, and you put minimal time into it.
Oh,
and I respect that. So with that, are we going to start over with the introduction?
I mean, we can definitely do that. It's because I remember all of the words, of course. And that's
go ahead.
It's the numbers with Tammy. Tammy, get those numbers right now. Go, Tammy.
You know what's missing for the people listening on the radio is the visuals and the faces he's making while he's singing that. It's just god awful in so many ways.
I'm a live performer.
You are. You give it all. So, all right, Tammy, let's talk about math. First of all, the market's down again today, or was it again down for the previous week, I should say. Where do we stand with the S&P year to date?
We're looking at negative 9.5 almost for the year. Yeah. And that's not, it's not that surprising given the macroeconomic situation we're in. And not to mention that last year we had a tremendous run.
Yeah.
So, and on the 1 year, we're still positive. We're almost 5. Again, I know that's the market has ups and downs. Nothing too surprising.
Yeah. So, I mean, so what you're saying is if we're down 9.5%, if you started January 1 and you look back, your statement's probably going to have some red ink to the tune of 8, 9, 10, 12 negative, depending on your mixture of securities, fixed income, things like that. Not that fixed income's helping a whole lot right now, but if you go back 12 months, if you say, well, 12 months ago, if I'd have put $100 in something, I'd have 105. Is that if we use the S&P as a gauge?
Absolutely, yeah. And to even go further on a 3-year time frame, the over return is 50% plus.
Well, that doesn't suck.
No, and it plays into the long-term game that we always talked about. The long-term, you buy and hold, you have fundamentals right, and you keep going. We talked about that before here. And if you like, I can even have the 5-year number, which is near 100%.
Wow. So, and this goes back to, before we dig in deeper into these numbers, because I know you have a few more details for us, but this goes back to something I try to warn clients against, is the high water mark mentality, where a client says, well, I put in $100,000 5 years ago. It's $200,000 today, but it was 220 3 months ago. So what they're focusing on is not the fact that they put in 100 5 years ago and it's worth 200. They're focusing on the fact that they put in that 3 months ago they had 220 and now they have 200, right? So you can look at that two different ways. And most people, we're going to get into what's the kind of bias that is, Ryan?
The human bias?
No.
Oh.
I told you he was sleeping during most of these. Recency bias.
Recency bias.
That means whatever your most recent high water number was is the one you're married to, rather than thinking, wow, if I look back over the last 5 years, I've doubled my money, right? That's how you should look at it. You should look at it over the long term, but instead people a lot of times will say, well, no, I don't care about that. I had 220 and now I got 200. What the heck are we going to do about that?
Right. The daily one, the one that says, one day, it's very right now. It feels good.
Yeah. That's never going to work. But anyway, so let's talk a little bit about those numbers you showed me just this morning, Tammy. Let's talk a little bit about what sectors are doing well. Let's talk about Treasury bonds, T-bills, and things of that nature. Where's the infamous 10-year number right now?
Oh, we're looking at decent numbers now with the discount levels, about 2.7 annualized.
Wow. Okay. Yeah. And that's getting back towards a normal trend, really. I mean, a lot of people are up in arms about mortgage rates, and this goes back again to recency bias. People are freaked out by the 5% mortgage rates, but that's kind of an average number historically. Am I right about that?
No, you absolutely are.
Yeah. So, I mean, we've gotten used to these 2% and 3% mortgage rates, and now 5 seems like a lot. And by comparison, it is. But for those of you that are old like me, we remember interest rates that were 12 and 13 and 14% in some cases back in the late 70s and early 80s. So 5%, with that being considered, doesn't sound all that bad.
So it sounds like we're doing pretty good overall. Nothing to, set the boats aflame yet.
Yeah, I mean, I don't think it's time to freak out just yet. And I've had this conversation with clients a lot lately where I say, if I told you that inflation was going to jump to 8.5, 8.8, which is a pretty darn high number for a variety of reasons that I won't go into. But we said it was 8.8. We say that the Fed is likely to raise interest rates 3, 4, maybe 5 or 6 times this year. Oh, and by the way, some clown over in Eastern Europe is going to start acting up and acting a fool and invading a neighboring country. And you would be down 7, 8, 9%. Would that make sense to you? And I think most people would say, yes, that makes perfect sense that all those things happened, none of which are positive for our domestic markets. And as I've said many times before, and I will say till they throw me off the air, is that capitalism is awesome, but it's also messy as hell. And we're seeing that played out right here.
Yeah, it's weird that when you watch the news and everything, and we've talked about this before, but the way that news frames things, and it's scary, and it seems like the market should be a lot worse than where it is. But when I talk to you guys, it's like, yeah, this happens. It's all part of the system. It'll fix itself and move on.
Yeah. I think we discussed a lot last week, it either fixes itself or what are the lives as we know them cease to exist, right? If we say capitalism, if we could take two approaches, we could say, well, oh, it's different this time. Oh, this is the end. Oh, woe is me. This is terrible. I don't know what I'm going to do. And what's my advisor going to do? And what should I invest in? And should I own Microsoft or should I, am I in the right thing or am I in the right? Bonds are terrible. I don't know. CDs aren't that great either. And we could do this hand wringing thing all day long and consternate over what we should do if the world ends. As I've said many times before, if the world ends, it just simply ends. There's no investment you can own that's going to fix that problem. But the reality is, if we get through this period like we've done every single other time, we'll end up in a good place.
Well, it's good to know the world isn't coming to an end, but this segment is, however. So if you want to get a hold of Scott, EdgewaterFamilyWealth.com is the website. And then we will be right back with more It's Only Money. Welcome back to It's Only Money with financial advisor Scott Brown of Edgewater Family Wealth. The number to get a hold of him is 407-648-1881 or go to edgewaterfamilywealth.com. So we're going through the numbers with Scott and Tammy when we last left off. Where are we at right now, gentlemen?
Well, we were talking about, as we often do, the weekly numbers, things we're seeing, trends we're paying attention to. Tammy, you mentioned something to me that I guess I shouldn't be surprised by, but I sort of was, is the returns on coal right now are astronomical compared to last year, and the returns on oil are not maybe what I thought they might be by comparison to last year. Walk me through that.
Of course. Oil last year did very well, as we all expect, as the economy is going back to normal, opening up, etc. But then the crisis that we mentioned started in February, which we would think that it will affect oil to skyrocket, which it did for a brief while. However, as countries started, and we're talking mainly about Western Europe, they started decreasing their dependency on Russian oil. They start to look for alternatives. One alternative for power is nuclear energy, but there's a lot of red tape there. And their alternative, because they have a lot of it in Europe, is coal. So that reflected on increased demand of coal going up to almost 130%.
Wow. So the byproduct of using less oil, in particular Russian oil, especially for Western Europe, and I assume even parts of Eastern Europe, is the alternative is coal.
Yeah, it's dirty, but it's cheap.
Yeah.
Unfortunately,
I'm sure Ryan has a joke there, but
you know what? I'm sitting here thinking, going, when I think of coal, I just think of West Virginia coal miners, and I was literally thinking of I guess there would be coal in other parts of the world, and there would be a French coal miner just underground eating baguettes, digging the coal. So yeah.
Yeah, I think that's what they do. I think they eat baguettes and dig coal.
Everything the French do, I imagine they have a baguette just nearby in a basic area around them.
Yeah, they have a little waste pouch filled with baguettes that they snack on while they're digging coal. Yes, I'm sure that's how that occurs. And so, Tammy, the other thing you were mentioning to me was airline flights, that they're just shooting through the roof. Talk to me about that.
Yeah, one measure that we look into before measuring how aircraft or air carriers are doing is the number of passengers actually flying. You see, there's a higher number of passengers, therefore higher demand, et cetera, et cetera. And we know that since the pandemic started, air carriers have been having some rough time, let's say.
Sure.
These numbers now are picking up, right? And we can check that on a daily basis even. So for instance, from January till date, we had almost 200,000 passengers flying and booking around in the U.S. While for the same period last year, we had less than or almost 100,000 people, meaning almost half of that number.
Yeah.
I know. I definitely just booked a flight myself because I was like, I don't know if I'm just tired of the lockdowns and the masks and everything, but I was like, you know what? Let's go to Europe. It's been almost 3 years. I need to get out of here. I don't even care anymore. Put me on a plane. So I imagine a lot of people feel exactly the same way.
Yeah, I'm sure the mask mandates dropping, at least for now, I think has probably spurred people on. But even prior to that, people were, I've had 2 or 3 flights in the last 6 to 8 months, and they've all been jammed up, man. I mean, there is not an empty seat on the plane. So I think there's pent up demand. People want to get out. They want to do things. They want to be with other people. And I think obviously those are good signs for our economy that is happening. Let's shift gears a little bit. Ryan, I was talking to you a little bit about wants and needs. Do you have any thoughts on people's economic wants and needs and what the differences are, or what that means to you even?
I think wants and needs are what separates kind of financially successful people versus people that are constantly in financial turmoil. At least that's been my experience seeing friends and family, where the wants will get you, Scott. I don't know if you know that, but the wants is every commercial on everything ever, and all the new and the shiny and the disposable, and I'd see that as more of a hindrance, but I'm also like such the far end where I almost never buy anything else. So you got to have a balance of wants and needs, I'm sure, but the wants will get you.
Well, and let me give you a different spin on that, actually, because I thought that's how you'd answer the question, which I think is how maybe most people would have answered. I'm reading this book called The Gap in the Gain by a dude named Dan Sullivan, who's very well known in my industry as a coach. And he put a different spin on it that I hadn't kind of thought through. So this is not a revelation I came to on my own. This is something I read in his book. And I thought, okay, well, this is a fair way to put it. So if you think about how you frame things, if you say I want something versus I need something, when you say you need something, you kind of get attached to the idea that it's like food, it's like shelter, it's like clothing. I need something. I need to earn this return, or I need to have this much money, right? And then what that almost does in Dan Sullivan's mind is it attaches a negative approach to that thing. So if you say, I need to retire successfully, I need to have $1 million, and then you don't, you only have 900, or you only have 800, or maybe you needed a promotion to make a certain amount of money and you didn't get there. He says you should actually frame it like I want to. And the reason he says that is because we live as people in what he calls either the gap phase or the gain phase. And the gap phase is you're always trying to keep up. The gap is, yeah, I'm successful. Yeah, Ryan Holmes is a well-known local celebrity. He's on a very successful morning show and an amazing investment show in the afternoon. And, you would say, well, Ryan might say to himself, well, that's cool, but I'm still not on national TV, or I'm still not a headliner on an HBO special or something.
What are you in my brain right now?
What's that? I am in your brain. Yes. There's a lot of room in here, by the way. But yeah, so you're living in the gap where you're saying, I don't have these things. I'd like to have these things. Whereas if you stop for a second and said, wait a minute, the gain way to look at this is I am a successful person. I have a great morning show that I'm a part of. I am a part of other projects throughout town. I am locally known. I am beloved, at least, by the group in this room. That's living in the gain. You're living in the gain portion of your life. And I think how I translated that, which I do to every book I ever read, to my business, is a lot of investors are in that need. I need this. I need the market to do that. I need my statement to say this. I need my financial advisor to know which stock. I need to buy the right stock. I need. When really that's just what they want. And if they just want that to work out, the fact that it doesn't exactly work out like that doesn't bother those people. He tells the story of the old speed skater, Dan Jansen. And I don't know, for those of you who may not remember, he's one of the most prolific, greatest speed skaters of our time, but he never won a medal until his last race in the Olympics. He would always fall or get hurt or whatever. And what he said to the interviewee, or the interviewer that was asking him how he got there, is he said, I just let it go. I just said, look, I've had a great career. I've been dominant. I've done this. I've done that. Pan American Games, World Games. And if I don't win this Olympic medal, that's okay. I want to, but I'm driven internally. I don't need exterior motivation. I don't need the medal to be happy. I don't need other people to see me as an Olympic medalist. I know what I've done. I'm living in the gain. And where I'm translating that back to investing, which I know is taking me forever to get there, but people live with this need to brag at a cocktail party, to say they bought XYZ at this price and it doubled. They need to have this kind of car. They need to retire this way. They need to have their financial advisor on the cover of Barron's magazine or whatever it is, right? Well, it's okay to want those things, but to need them is detrimental to your cause. I need for my statement to never have red ink on it. I need for the market to never go down. These are things we all want. This is certainly, as an advisor, it's what I want. It would make my life a lot easier, but I don't need it. I don't need the market to always go up, because you know what? It's not gonna. So I know that. And if I can get my clients to get out of this need to reach some unrealistic or unattainable goal and make their needs more wants, then I think the conversation gets easier and makes those people more flexible, and more flexible people do better with investing.
So it's all about how you frame it, is how you, like, mentally, is how you will, deal with it. And you could end up maybe being just a lot happier overall.
I think that speaks to life, but I definitely think it applies. The more I read it, the more I thought this applies to investing. My clients who don't have hardcore needs, I need to outperform this index, or I need to earn this return, and they have that lack of need becoming a want, makes you a more flexible, humble, and I think a more successful investor.
Well, I think our listeners want to hang around more for more great financial advice with Scott Brown of Edgewater Family Wealth. We'll be right back with more It's Only Money. Welcome back to It's Only Money with financial advisor Scott Brown, and Tammy from EdgewaterFamilyWealth.com is the website. The number 407-648-1881. And we were talking about wants versus needs before we went to break. Breatharians, Scott, have you heard of them?
Who?
Breatharians.
Breatharians?
Breatharians is a sect of people who think that all they need to get by is just air. And they don't eat food, and the leaders of this alleged cult say that, like, all you need is air. These other things you want, you think you want food, you think you want that? No, air is all you need.
Oh, and the Beatles said all you need is love, right?
Yes. So a lot of contradiction here in from other obviously credible sources, Scott.
Yeah. I thought you said Bruce Arians. I'm like, you're talking about the coach of the Buccaneers?
Yes.
Is Bruce Arians the leader of the Breatharians? I don't know. So yeah, I can't speak to only needing air. I like a sandwich every once in a while, so I'll have to think about that one.
Grilled air doesn't sound very...
Grilled air, blackened air.
You should try jerked air. It's amazing. You only get it in Jamaica.
Side of bacon. Well, that blows it right there. You can't have the side of bacon, though. That ruins the whole thing.
I know. That's why I can't do it. But there are actual. I remember, like, psychology. They tell you about the hierarchy of needs. Tammy was talking about that during a break, and there's actual stuff that you need just to live. But the way you were talking earlier and framing everything as a want is so good, only because I think we all talk to this person who feels like they've either missed an opportunity, whether it's like in sports or a relationship or investing, and then they kind of like define their existence off of the missed thing because they felt they needed that. And if they, from what you're saying, and I think it's beautiful, it's like if you just frame that as a want and just keep going to something else, you'd be so much better off.
Yeah, I mean, I think, again, it's how are you rewarded? How are you motivated? A lot of people are motivated externally by other people, right? The need to talk about, well, I missed that opportunity, but I'm going to get this one. I missed out on the Apple IPO, but I'm going to get the Tesla IPO because I need to be able to say to my friend that I did this. I need external things to make me feel good about myself. And this, this is like a whole psychology thing happening right here, but we all know people who are driven by the conversation they want to have, right? But if you're driven internally, you can have what I call a healthy detachment. And a healthy detachment is not to be ignorant. Some people think, well, you're telling people not to pay attention. No, that's not what I'm telling you. But it's a healthy detachment is you're aware. If you're a client of ours and you're having your annual meetings or your semi-annual meetings and an occasional phone call and maybe a discussion about the markets, and maybe you're listening to Scott's and Tammy's radio show, whatever it is, but you're not reading Barron's every morning and looking for the stock of the day. You're not glued to CNBC all day. You're not watching the Bloomberg. You're not married to this stuff. If you're a retiree, you're spending time with your grandkids. You're playing golf with your buddies. You're traveling to Europe. Again, you're not ignorant, but you have a healthy detachment. Some people cannot detach themselves from pointless information. If you want to know the truth, it's like the person that can't. They want to talk about politics 24/7. They have no detachment from politics, which is the hilarity of that is they're completely detached because they have no control over it. Unless you're running for office, it is a pointless conversation, right? And even then it's turning out it might be a pointless conversation. But people who are, I read this and I saw that and I did quote unquote research on whatever, just stop it. Just detach, again, if they're getting ready to drop the big one on us, I'm sure we'll be notified. Right? You don't, and the same is true of investing. If you're spending all day long reading Barron's, reading the Journal, reading some newsletter you've paid $9.99 a month for, and trying to find the best stock on the best day, stop it. That is an unhealthy attachment. And what it comes from again is that, it's like the guy who wants to have the nicer car in his driveway of the other guy, right? It's just the intellectual version of that. It's the intellectual, I know something you don't know, and if I don't, I feel less about myself. I am completely comfortable not knowing things. The list of things that I don't know is really long, and I'm comfortable with it. So I think how you frame this is critical to your success.
You're like financial Socrates.
Yeah, and you know what Socrates said, his most famous quote, the only thing I know for sure is that I don't know anything.
Exactly. And there's nothing that you could do as your standard investor to make the market do anything, correct? I mean, your approach, as you said many times in the show, is the slow, steady, and you will get the results that way. But what is the percentage on somebody who got rich in one single move in one day? I mean, it's got to be super crazy small.
It's less than 0.1%. The idea, again, this goes back to my book, I Never Made Anyone Rich. Still not a bestseller, by the way.
I wonder why.
The idea, I didn't make myself rich with that book, by the way, just to prove a point. But the idea that you're going to do a trade, that you're going to pick a stock on Tuesday, and by next Tuesday, you put in $100 and now it's worth $1 million or even $10,000 and it's worth. That's not going to happen. People who get rich in equities do it over the long term, or maybe they worked for Apple, or maybe they were in on the IPO at Microsoft 30 some odd, 40 some odd, however many years ago, 50 some odd years ago, right? Those people got rich. But even if you get rich in an IPO situation, you probably worked there for 5 years before that happened, right? There were probably times when Apple almost went out of business. There were times in Steve Jobs' garage when they were trying to figure it out that they were short on lunch money. So even that situation is not quote unquote an overnight situation. So if you need to make that special trade, or you need to earn that special return because you heard your buddies earning 8 and now you need to earn 9, that need is going to go unmet first and foremost. And second of all, it's a fool's errand. Like I've said before, I've been in this business 35 years now. I have, of the top firms in Central Florida, I probably know 8 of the top 10 people that run them. And I can promise you, none of us have ever made anyone rich overnight. That is not our job, and it certainly isn't our need. My need is to deal with the markets as they come. That is what I want the markets to do, is earn 10% every year and go straight up. That's silly. It's not going to happen. And when you need an outcome and you don't get that outcome, that can be discombobulating to people. They struggle to recover from the fact that what they wanted did not occur immediately, right? And those people get all sideways. It's like the person who puts their money in the 401k and they just started out at the company. A year later, they've put in 1,000 and it's worth 800, right? They needed that to be positive, but it wasn't. So now they're thrown. Well, this must all be broken. None of this, I put in 1,000, but it's only worth, and they can't process the randomness of it. They can't just let it go. They can't just keep adding, recognizing that markets are long-term. They wanted it to be positive is probably what they should have thought. I want it to be positive, but if it's not, I know over the long term, it likely will be.
It's the way you're saying it. It makes it sound like need is more like has a stop sign at the end of it. Like if the people with the need, if they don't get what they need, they're stopped. They're stunned. They don't know where to go from that. It seems like if you have a want mentality, you're more easier to pivot. I mean, because you can move from like, okay, I wanted this. I got to switch that up now. And now what do I want? And go from there.
Yeah, I mean, it's like if you're playing golf. It's an easy example, right? You go out and you're like, I'd like to shoot. I want to shoot a 78. And then you go out and shoot a 79. Well, if you needed to shoot a 79, you probably throw your golf clubs in the garbage, right? I mean, 79 is still a good score. So again, I think it's just how you frame not only the way you invest, but the relationships you form with people you invest with. If you have an advisor and you need that person to do this amazing thing, they're going to fail every time. Because what we see in the business, if somebody comes to me and they say, hey, Scott, I'd like to talk to you about handling my money, and I find out they're on their 5th advisor in 7 years, they clearly had a need that was unrealistic and couldn't be met. As they say, if Mary has a problem with everybody, Mary's probably the problem.
Yes, it's those people online who type statuses like, I don't want any drama. Those people are the drama every single time. Those people and people who constantly post like inspirational quotes are the people that are the worst. And you in the audience know who I'm talking about if it's you.
Yeah.
You need to stop doing that. Because we all know in that relationship that you're in that you'd post about every year or so with the new person, you need to stop doing that too, because it's not a great track record. Anyways, that was just a personal rant from me because I'm the rant side. ScottsTheWealth.com. The phone number, 407-648-1881. And that book that Scott has not made himself rich from is called I've Never Made Anyone Rich. And you can find that on Amazon. We'll be right back with more It's Only Money. Welcome back to It's Only Money with Scott and Tammy from Edgewater Family Wealth. EdgewaterFamilyWealth.com is the website. The phone number again, 407-648-1881. And we spent a couple of segments talking about wants versus needs and the mindset of it all. But my question is, and I know you work with a lot of wealthy and successful people. That is literally your job. Is there a different kind of mindset? Do the millionaires you work with have this wants need thing down, or are they just like me? Are they people that got lucky? And
by and large, they are not different. I mean, they're different in a couple of ways, but they're just on average, they're average people. And you know what? I think people, this happens to us in school, right? When you go to school, they divide you into groups, right? I remember very distinctly being in school at a young age, and the smart kids get pushed over to the gifted class, and then the next group of folks are in the you're pretty bright, you're not at the top end, and what you find is that that's a bad thing, not only for the kids themselves, but it's a bad thing for society, because then those people become somewhat down on themselves. They start to kind of give up internally, right? And what we find, and conversely, those bright people, those gifted people, not always, of course, but quite frequently, they end up working for the not so bright people. And what I mean by that is, I used to tell somebody would say, well, how do you know who to hire? And my thing was always, because I've been in this business so long and my business has a high attrition rate, and it was never the Ivy League educated academics that made it. The people that make it in my business are the ones that threw the best keg party in college, right? The C student who could gather a bunch of people up, get them to the house, get the beer bought, get it bought cheap, get a bunch of food together, and throw one magnificent party. Those people are your entrepreneurs in waiting, because what we see with And I'm not diminishing academics. Don't get me wrong. Academics are important. I want my engineer and my doctor to graduate with straight A's. But other than that, it is not a good sign of how well somebody will do economically. And the studies have shown that most millionaires fall into the middle range on their SATs. The average GPA, Ryan, for a millionaire coming out of college was 2.9. Not 3.5, not 4 point, whatever people seem to be. First of all, how do you get more than 4? That's the part I don't know.
I never figured that out. 3 was hard enough.
GPA is 4.8. How does that even happen? How's that? That doesn't even make any sense.
Well, there's weighted credits and a lot of I can tell about this.
Yeah, thank you. Well, it's above my head. But when they ask these people about themselves, when they interview millionaires, and this was done in The Millionaire Next Door, and then the next book, which was The Millionaire Mind, they ask these people, well, how do you feel about yourself? Do you think you're superior? And the answer was no. What was your grades? Well, I was on average a C student. A lot of them disproportionately had learning disabilities, ADHD. Dyslexia is very big amongst millionaires. And people will say, well, why is that true? Why? Because these are people who learn to overcome things early. Because if you're an academic, if you're the kid who's in the gifted class, you're in the smart, you got pushed through, you were fast tracked, you were in all the best classes, higher classes, and your job was to be smart. You learned early at 4 or 5 or 6 is that I'm smart. I'm a little better than everybody else, and life isn't going to be hard for me because I'm smart. Right. And then they make their way through high school. They get into a good college. They get straight A's in college. They do their homework. They do their studying, and things work out exactly like they're going to work out with. They got scholarships. Their parents didn't make them work because, well, they were smart. Your dumb brothers got to work, but you are smart. So therefore you get to go to college. And this is what they learned. And then they went out and they got a job and they got their ass kicked. And this is where they become very, quote unquote, snowflakey, right? My partner and I, one of his favorite stories is he hired a young woman many years ago, and she was an academic and she had straight A's and she was interning, and he asked her to make a spreadsheet, Ryan. She made a spreadsheet. She went, she put together the information, she brought it into his office and said, here's my spreadsheet. And he said, oh, this is pretty good, except for this one part I don't think is right. And he was staring down at the piece of paper as he was saying it. When he looked up, she was crying. He didn't say you're awful, you're a bad person, you eat puppies. He didn't say any of those things. He said one of the lines is wrong. This is a person who had never been told anything she ever did was wrong. She quit the next day. So what entrepreneurs and who become millionaires have in common is that they learned early and they probably got jobs early. I started bagging groceries when I was 14, and my boss made it very clear to me that I was expendable and, quite frankly, useless most of the time, right? And I learned to hear those kind of things and not be offended by them and understand the context of struggle, the context of overcoming, whereas a lot of people who are academics never experience the struggle. And then when it hits them in the face that it's hard to say, you got to put more money in your food. You can't have everything you want right away. This is very perplexing to people who have been brought up with this academic mindset. To that point, I'm going to list some people who they think they either know for sure or think had ADHD. The list includes Thomas Edison, Albert Einstein, who was also dyslexic, by the way, Charles Darwin, Greg Louganis, Mozart, Newton, Charles Schwab, George Washington, they think had issues with grammar and spelling and memorization, which they suspect was ADHD. So
just him out there chopping a cherry tree is very ADD behavior. Like he's just bored.
Why are you chopping the cherry tree? But again, the point is that what millionaires have in common is the ability to delay gratification, right? That's a big one in this country. People want it yesterday. I want to feel good all the time. I want to be happy all the time. I want the new thing, and I also want to be a millionaire. But the problem is those things don't go together. So delayed gratification is a form of struggle that they never learned.
Interesting. One of the weirdest, like in college, one of the weirdest studies, and I think about it every day, which is the study of delayed gratification, where they did that lifelong study with the kids, and they put the cookie in front of them and to see how long these kids could go without eating the cookie, and the kids that ate the cookie right away versus how the ones that could wait later in life, 20, 30 years down the road, the ones who could wait to eat the cookie as a kid ended up doing like significantly better in life than the kids who just ate the cookie right away. And that always bothered me because I feel in my heart I would eat the cookie almost immediately.
Yeah, you're a cookie eater for sure. We've learned you're not going to eat the cookie now, right? We're not, at least not the whole bag of cookies.
Yeah,
right
I'm hoping that I know now not eating the cookie is a good thing, i.e. delayed gratification is a good thing, that I can, be an outlier in that study, hopefully. But yes, I think about it a lot.
Yeah, I think, again, it's about, I tell my kids to embrace the struggle, embrace that it's hard. If it's hard, it's probably right. If it's easy, it's probably not the right. If you see the easy path, whether that's in investing or in life, it's likely not, I'm going to buy Bitcoin and that's going to solve all my problems. Or I'm going to invest in Ethereum, or I'm going to buy Tesla, or I don't even know what the next wacky thing coming our way. It was gold, or it was .com stocks in the late 90s, or it's real estate in 2008.
Currently, it's French baguette coal.
Yeah, the French baguette coal, which is apparently a new blend of coal I was unaware of. It speaks very sexy. It's when they're mining the coal, their voices are quite wonderful. Yes, I get that. But I think that in terms of struggle, people who are academics who go through school and they've been told they're smart and they've been told they're going to be the successful one, they're going to go to Harvard and this is going to happen and that's going to happen. Real life on average does not work that way. And that's why the average people like myself who struggled early were not great students, were not told they were the brightest bulb in the chandelier, still to this day, by the way. Thanks, Mom.
That's how you get book titles like I've never made anyone rich.
Exactly. I mean, I think that's the key lesson here is millionaires not only can get through a struggle, but they embrace the struggle.
1,000%. I was one of those gifted kids, and I think the best thing I could do was get out of that program somewhere in high school because you were just told how smart you are and how different you are. And there's the other side of it too, which I would argue is the bigger side of gifted kid burnout, where they ended up just doing nothing and going full on kind of crazy a little bit from being told they're good. And then when you hit that first block of adversity, you just shut down and break down. Saw that happen to several friends of mine. Yes, don't. It would be weird. I'd be the weirdest parent because my parenting advice would be like, don't ever let your kid know how good they are.
Well, I think there's something to that. I mean, we don't want to be mean to our kids.
No.
And we certainly want to see our kids succeed. But parents get way caught up in the. I can't tell you how many parents have told me that their kid, they can't figure out how to work it into the conversation, but they get there. They get there. Well, Jimmy, he's, did I mention he was gifted? Yes, 7 times now.
Well, one thing you are gifted at, Scott, is financial advice and working with Edgewater Family Wealth. And if you want to get a hold of Scott and Tammy and the whole crew, that's edgewaterfamilywealth.com. That number again, 407-648-1881. And if anything, go to edgewaterfamilywealth.com and check out their content library. It has so much amazing stuff. It's got Financial Talk with Tammy, Asked and Answered with Scott Brown, and a bunch of other stuff, including our podcast, It's Only Money. So thanks for hanging out with us this Sunday. Scott, Tammy, you'll have a wonderful week.
Yeah, and clearly people are rich, right? Or wealthy. You don't have to be rich. I like the term wealthy better. I mean, to rich reminds me of like the Monopoly guy or something. But, there's people, there are regular people.
Now that guy I trust. You don't see the problem, Scott? You don't have a monocle.
Monocle is, now, if you can meet a guy with a monocle, I'm all in.
What was his financial advice? He said buy Park Place?
Where is that?
Where is that? I can't find it.
Tune in to It's Only Money with Scott Brown from Edgewater Family Wealth, Sunday mornings at 7 on Real Radio 104.1. Raymond James Financial Services, Inc., member FINRA SIPC. Edgewater Family Wealth is not a broker-dealer, is independent of RJFS.